All right, what's going on, everybody? Christopher Inks with TexasWest Capital. And I just, we're kind of running a little bit late here, so I left the 30-second lead in. So surprise. We got more surprises for you today. I'll wait for your comments when I bring them up. I think you guys will know what I'm talking about when I bring the other guys up here. Got Andrew and Tillman sitting in the wings, ready to jump on all this Bitcoin discussion, man. Everything from more Davos, right? So now we've got Brian Armstrong at Coinbase talking about gold being flipped by Bitcoin in 5 to 10 years. We've got Trump media talking about buying Bitcoin and other cryptos. And we're talking about the Czech National Bank coming out. We've got the DeepSeek stuff. Is it really what they said, or are they lying? Of course they're lying. It's China. Oh, that just sounded awful, didn't it? That sounded like USA, USA. China's a bunch of liars. Okay, anyway, hey, listen, guys. Do me a favor, hit the thumbs up, hit the like, subscribe, follow the gentleman I'm about to bring up here. I'm going to use that term loosely today. And then, see, I can say all this stuff because they're sitting in the wings. They can't say anything yet. Anyway, make sure you're following them on Twitter. They're on X at AP_Abacus and at TexasOL61. I will never get TexasOL61 wrong again. You guys see that, right? He's just so proud of me. I see him smiling so big. Coming up. So anyway, hopefully y'all are doing great. I'm ready to do this. Hopefully you're ready to do this, because if not, here they come. What's going on? Andrew, Tillman, gentlemen, how are y'all doing?
Hey, how are you guys doing?
Well, which
doing
guys?
Fantastic. Doing fantastic. It's nice to see that my visuals here are clear and concise. Oh, wait, we just got Tillman. He finally cleared up. He was looking blurry.
That's Chris's virus he put on my side of the screen. I don't know.
Why are you still blaming me, man? Come on, so take some accountability, man.
Listen, I've got a class 1 setup here. There's no excuse.
In the mountain, in the middle of nowhere, Colorado. Right?
Hey, listen, take it up with Elon. I'm on Starlink, so it's his fault if it's anyone's fault. Okay.
Hey, look at that. Somebody already caught up to the thing. Look at the lid on that brain. Talking about you there, Tillman.
I saw the last episode, and we all did not wear a hat. And I thought, if we keep this up, they're going to rename the show without us doing it as Baldies, Beards, and Bitcoin. And we're not doing that. So I've got emergency hats now next to my desk that I can reach and grab and throw on impromptu.
Well, it looks like people are loving the hat there, man. I told you they would. I told you they'd notice. You looking all stylish. I'm just going to do this then. So I'm not looking up. There we go. We got hats, right?
Yeah.
Anyway, so yeah. Man, oh man. So, hey, listen, guys, lots of news. Bitcoin-wise this last week. I kind of said it here at the intro there. First thing is, God, Davos just keeps on keeping on, right? So we had Larry Fink do the unthinkable. Yeah, I said it. You got it. He gave us a price target for Bitcoin at Davos, right? And we were all like, ooh, because that's not Fink, right? Fink doesn't do that. Yet there he was. And now the latest thing here is Brian Armstrong over there at Coinbase says, hey guys, listen up. I think, next 5 to 10 years or so, Bitcoin's probably going to flip gold's $18 trillion market cap. He said, I think it's clear at this point that Bitcoin is a better form of money than gold. It is provably scarce, just like gold, but it's more portable and divisible. So you can it has a higher utility, I would say. It's the best performing asset in 10 years. So for a store of value, I think it's going to be important for governments to hold this over time. It might start with being 1% of the reserves, but I think over time, it will come to be equal to or greater than gold reserves. And I think that brings an important point up here, because y'all and I, we talk. We've been doing this 32 episodes now, right? 32 weeks we've been doing this, and we continue to say, listen, Bitcoin is not your get-rich-quick scheme. It's your lifeline, right? It is that thing that you want to invest in and keep it for quite a while, right? But isn't that what most people miss when something new comes out? They don't get the huge thing at the beginning that they think they need to get. And so then they lose interest. They don't do it and whatever. And 10 years down the road, 20 years down the road, when it is everywhere, they think back and go, God, I wish I had bought then, or I wish I had bought and held back then. Is that what usually happens?
Well, and I can only speak from experience in my own heart. And when, when you're in your 20s and your 30s, even you're kind of chasing, hook 'em, you're chasing, you're chasing the big hit, the home run, right? And I think, especially when you're young, you think that the home run is the way that you do it, and it's not. Compounding is the most powerful thing in that you can experience in life from a mathematical perspective. Einstein called it the eighth wonder of the world. He said you either understand it or you're a slave to it. Those are his words. And so, compounding interest, if you can find ways to rotate in and out of things and you spread it out, then you're removing risk in such a way that, if you live even a moderately long life, at the end of your life, you're going to be well taken care of and well positioned. And I'm not saying, listen, I love hitting the long ball. The home runs are the fun ones,
Yeah.
but you can't put your material eggs in those baskets. You have to, that's play money. And if you hit, you hit. And you should be willing to kind of realize, and this is I think the realization that I had to come to is, you know, if I'm right on a bunch of those with a little bit of money, then maybe I could step up to more money with those profits. But there's no difference. It shouldn't be in our mind any difference. If I'm going to make a call, like if I'm going to go pick up the next penny stock or the next, big, penny coin, basically, and find something that I think has a lot of potential but a low market cap. If I'm going to do that, right? The game should be, did I choose one that actually got traction, or do I make excuses for why that project failed? And do I, kind of pad my own ego and then roll more money into the next one? Because now I'm playing with this, like, I got to catch up mentality. That, I think, psychologically for me, that's been the thing that has been the biggest turning point, is like, you know what? If I take a leap of faith on a flyer on a home run ball, I'm expecting to strike out, and I'm prepared strategically for the strikeout, because that's what the probability points to. Risk and reward are proportionate.
Yeah. Yeah.
So I'd like it noted here on the podcast, because Tillman often talks about Einstein and the eighth wonder of the world associated with compounding. I would like it noted that my fiance calls me the ninth wonder of the world. And so, just in the minutes of the podcast, and as we move, I just want to make sure that was noted here.
The Astrodome already took that, so maybe
Yeah.
you didn't. Yeah, the Astrodome got that
I'm not.
recognition already.
You are literally tossing me softballs. I'm going to leave it alone. I'm going to leave it right there. So I think the narrative at Davos was interesting, right? So you had Ray Dalio, who mentioned Bitcoin. You have Larry Fink, who is making price predictions and sounds like he's reciting Satoshi's white paper and the Bitcoin white paper. You have Brian Armstrong is again continuing to advocate for his firm's position as, for all intents and purposes, quite the market maker associated with all things Bitcoin and crypto at large, where they continue to be, the authorized participant and custodian of choice for 8 of the 11 Bitcoin ETFs. So he's got as much skin in the game as anybody has ever had. Point being, though, is 5 years ago, Bitcoin wasn't mentioned at all at Davos, even in private conversations. Nobody talked about it. Now it's being talked about on television with CNBC, with an audience that is interested in hearing about it.
Yeah.
The likes of Dalio and Larry Fink do not talk about stuff that they don't have a rooting interest in, associated with on their balance sheet, and have a meaningful position in. So they don't talk about those things. There's no reason for them to. They don't have a rooting interest in it. They do now. And that interest is not going to lighten anytime in the near future. It's simply going to increase. So, there's your headline associated with Davos. And additional headlines continue to come out on a daily basis. It may have been the last podcast or the one previous where I simply said, on any given week right now, we're getting a year's worth of headlines associated with Bitcoin and crypto. So back in 2018 or 19, if you'd heard about one nation state having a conversation about adding it to their treasury, it would be world shaking for the world of Bitcoin. If you heard about one corporation that had an interest in, adding Bitcoin to their balance sheet, it would, Bitcoin would go up 47% that week. Now these things are happening so often that we miss half of them.
Yeah.
And so it's just it's a remarkable time for us to be living in, where we've got to keep up with all the positive Bitcoin news, whether it's at Davos, whether it's a corporation, whether it's a state here in the United States. I think just in the last 7 days, there's been Arizona, there's been New Hampshire. I think in Ohio, there's been an announcement and a bill moving forward. There's been another state where it actually passed the House in that state, and it's going to the Senate. And I don't even remember what one that is. So these are all things that are happening every day, and it's just difficult to keep up.
Yeah, our friend Gary Cardone, has been talking for a few months now, leading up into this about game theory, nation states themselves, even companies getting in there, because the reality of it is, again, if the U.S. government is talking about it, the last thing you want to do as a state is not to at least be talking about it, right? If the U.S. is talking about it, if you're Japan, like Japan has done, they go, well, hey, wait a minute, maybe we need to be doing this. If you're another country, you're like, hey, again, maybe we need to be doing this. And the more people that are talking about it, the more fear that they're going to get left out, or they're going to be last, or they're going to be coming in late. It's like I always talk about, everybody thinks when we talk about trading in the markets, we talk about herding behavior by retail. But as I've pointed out so many times before, a few times on this show and on some other shows, it's not just herding with retail, it's herding with everybody, right? Your money managers herd. Why? Because if they're wrong, well, they're all wrong together. But if they're doing something and you're a money manager and you do something different and you're wrong, oh, you're bad, you're out. You lost money, you may have lost your entire list, right? And I think we see, kind of that same thing coming up with people when they're talking about what's going on with Bitcoin and, potentially looking at it to use it as some sort of reserve currency.
Or just adding it to their balance sheet. I mean, even if they,
Or again,
yeah, just buying it. I will tell you, there's a headline and some things that came out of Davos that hit me specifically and made me think really long and hard. And one was this surprise that China has a lot more NVIDIA chips than we thought they did, or that they were supposed to have. Yeah, and I've been talking about this before AI was the hot topic, because those same chips, that same computational hardware, are on the ASIC side of things for the mining industry, for Bitcoin mining and all other decentralized proof of work networks, essentially. And so when you're talking about the three biggest chip manufacturers for ASICs being in China, and them being responsible for 95% of the ASICs being produced on the globe today, I think the strategic national reserve conversation is great. I think that there should be some conversations as it pertains to concentration risk on the hardware manufacturing side. And if you're going to allocate some capital to protecting this network, I would be allocating it on the production of hardware and on ASICs that are made here in the United States. And I've been saying that for a couple of years, and even tried to get Elon to respond to a tweet of mine a while back saying that he was the guy that could do it. I mean, if there was one thing to create next, it would be the security around the most free transactional network that's ever been created in the history of mankind, and ensuring that that it's decentralized forever. And I don't know if you've seen some of the headlines this week about, I think one of the mining companies unlocked six blocks in a row. It's never been done before, so it's proving kind of a concentration risk within those mining stocks, and that doesn't need to be the case. If you put if you put it's the age-old adage of, like, do you put all your eggs in one basket? That's what ASICs are. You can only produce so many of those per year. They're very expensive. It's a very steep curve to continue to chase over time. Whereas if you look at the aggregate hash rate capabilities, if you put much less expensive technology, old ASICs, and you hardwired them into consumer products, you would have the United States in a dominant fashion controlling the network as a free society, but it would not have concentration risk into a few hands. It would be the many. And if you talk about securing Bitcoin in the same way we know it now, without any forks or stuff that we don't like to talk about, that's really the only solution. So knowing that now the cat's out of the bag, that China knows the hardware is where the action is, both from an AI and a crypto perspective. Why do you think mining has been so highly concentrated in China for the last 15 years of Bitcoin? It's been because they understand how to make the hardware, and they love to control the markets with that hardware. So soapbox ended, but I do think that's a major thing that we should be talking about as a Bitcoin community, and that the politicians should be addressing, because it's not just buying Bitcoin and sticking it in a cold storage wallet that really is the entire picture of supporting the network, as far as I'm concerned.
Yeah, speaking of, I think I just in passing saw a quick update on my phone or something about this morning about Trump pushing tariffs on semiconductors to bring them stateside, to bring them here in the U.S. and have them start being made here. So, and he's been talking about how he wants it to be, U.S. to be the Bitcoin capital of the world and Bitcoin mining capital of the world, and have all the Bitcoin made in America, and that kind of stuff. And so, it seems like what you're talking about would be something up his alley, as far as kind of trying to bring it stateside here.
It just does. I don't think I haven't seen anyone that he's appointed that understands Bitcoin at a mining level. Maybe I missed somebody or I'm wrong. And I just think it's a really ignored piece of the whole, what you're buying into. And it's not at a place where we couldn't easily dominate. We could. It just takes innovation here in America and real factories making the things. This is real hardware that has to be manufactured. And so you talk about getting Americans working on something that they can be proud of from top to bottom in an industry. Let's start making chips, and let's start making them here, and because that's the future. That's going to dominate the AI space and the crypto space going forward. He who has the greatest AI computer has the power.
When we're talking about Trump and China, we need to say it like him. China. Okay.
China. Yeah, China.
Okay. It's interesting that the market fell for the head fake that was DeepSeek. One of the guys that I appreciate the most from a macro standpoint, traditional finance, is Tom Lee. And he was all over it. He went all over a bunch of the shows and said, this is as big a head fake as the last head fake we saw in markets, which was COVID in 2020. And everybody fell for it and thought the world was coming to an end, and not even close. And so the bounce back will happen, and we'll go higher. So that's kind of the point, like being afraid of innovation and somehow additional innovation is a problem with current innovation. That's nonsensical. So It's almost like the Astrodome being called the ninth wonder of the world. I mean, that makes no sense whatsoever. I carry that title, but
it was the first dome, man. It was an engineering feat.
Well, Andrew's talking about his dome now, so you know.
Yeah, that's right. That's right. So yeah, it's every over the past, well, since Bitcoin was since Bitcoin came to be, every dip has been for buying. Every dip has been for buying, and short term, long term, bear markets, bull market dips, all of those things. Bringing it to today, I find it interesting and compelling that even though Bitcoin is up nearly 1% a day and the broader markets are down just a small bit, in reality, traditional markets are waiting for the decision of the Federal Reserve, right, on interest rates. And if you take a look at the chart for today, since 9:30, Bitcoin also is waiting for the answer from the Federal Reserve. It's done a whole lot of nothing. It's ranged in between 101,750 and 102,750, which, if you're any good at math, is less than 1% range for the entirety of the day today. So it's also waiting on that announcement. And so it continues to be a narrative, and such a compelling narrative, that Bitcoin is much more a traditional financial instrument than it was 2 years ago, 3 years ago, 5 years ago. Movements or valleys or non-movements were tied to completely different things, disassociated from the larger money movements across the globe. Now Bitcoin is integrated into that in a meaningful way, and we're seeing it play out from a micro standpoint just today. It's waiting on what the Federal Reserve does, and we'll see it when it comes out at 2 p.m. Eastern. We're going to see a bunch of movement on Bitcoin. Where it ends up at the end of the day, but it's going to happen. It's going to happen.
There's either a big red button out there that one person pushes and everything dumps, or we have very efficient markets. I'll let you decide which one that is. But I agree. I mean, it is part of the system now. I saw that even as far back as 3 or 4 years ago, it being correlated to the equities market in some way, or not correlated. And so I think it's gotten to a point now where it's just another egg in the basket, and it does exactly what the macro tells it to do. I do think that all of these, it's not accident that they are triggered on Sundays. It's hard. There's been a lot of effort put into hiding in our true inflation rate against things that are hard to hide it against, like silver, for example. There's a lot of paper silver out there in an effort to kind of make that a reality. There's so little silver available that if big capital steps in and pinches it, it moves drastically, and they don't like that. So they've made the market a lot bigger than it actually is with paper, to essentially dull down those price movements. And so I think we're seeing that in the Bitcoin side of things, but people have to accumulate. It's very, very hard to hide inflation against something that has a fixed denominator like Bitcoin. It's almost impossible. The only way you can is by creating derivative markets around it. And that's kind of what I think everybody was waiting for when the system was going anti-Bitcoin, anti-Bitcoin, anti-Bitcoin. It was inevitable that there was going to come a day where they realized, oh, we can't beat Bitcoin. It's bigger than one person. We can't stop this. It's out there in the ecosystem in a way that we've never seen technology exist before. So what do? They control it with capital, and they create monetary systems around it. And we're seeing that evolution right now, basically.
Yeah, and we've got as part of the title of the show here, we've got the Czech National Bank. What's his name over? I can't recall it off the top of my head at the moment here, but he's talking about, hey, listen, I think Bitcoin is probably an important part of it. He talks about how they've hit their targets. They pull the inflation back to their targets. He's talking about allocating, raising their gold reserves up to something like 5%, I think is what he said. Equity, something like 30%. But he's talking about, hey, listen, I think that Bitcoin needs to be an important part of this conversation and likely a part of what we're doing here. And so he's pushing for it, for the National Bank there to kind of bring it in as a reserve.
I think the name you're looking for there is Dolph Lundgren. He turned his acting career into a position as the Czech guy on the
is that who it was?
On the monetary side, yeah, Dolph Lundgren.
The action
many people
star.
know that, but he's handling monetary policy in the Czech Republic now. But you're right. It is game theory. So game theory is, everybody's talking about it. Who's going to do it first, or who's going to do it in the most meaningful way? And you don't want to get stuck at the back of the line, when everybody's giving out popsicles, because the last popsicle is going to get melted, right? So, again, at some point there's going to be a flashpoint, right? There's going to be a flashpoint that says, okay, this is happening now. It's not just rhetoric. There's actual action that's happening here. And you got to be in the game, or you're not part of it at all. You don't get to play. So that being said, whether it's the Czech Republic, whether it's China, whether it's the United States, whether it's Argentina, whether it's El Salvador, whatever it happens to be, if you're not first, you're last. Okay.
It's like seeing a cockroach. If you see a cockroach, there's 10 more behind the walls for everyone that you see. And if you hear about a nation state thinking about it, there's 10 that are doing it that aren't telling you about it, because the biggest ones, they don't have the luxury of announcing today we're going to buy, that's you hear about it after the fact, not before the fact. And so if we're taking a cue from just the number of nation states, number of companies that are talking about it, I think there's 10 for one that are back there behind the curtain actually doing it. And, we'll hear about it after it's done, after they've acquired their position. And that's why we see the floor being as strong as it is. You get these radical drops in the middle of the night where no one's awake on little to no volume. But boy, you find that volume pretty dadgum quick. And when it steps in, it's an immediate bounce back up. And, it's showing me, I remember 3 or 4 weeks ago when we crossed back over the 100,000 mark. You can't believe how many people were DMing and texting going, it just can't hold 100,000. It just can't do it. It's going to 70, 60. All may be the case, but this looks different. I would agree with them if you compared it to previous cycles, but if you compare it to the dips within this cycle, I don't see that happening. I think there's too much buying pressure from big enough people that have not accumulated their position and don't want to talk about it until they do.
Well, everybody freaked out last week when we moved from 104 down to 97 for 45 seconds. And then we're back up above 100 almost instantly. And again, that freak out 104 to 97, that's a 6% move. I mean, that's literally nothing compared to what we're used to in this. If you've been here for more than 5 minutes, it's nothing. 5% moves used to happen in 15 minutes, in previous cycles. And they were sustained 5% moves followed by additional 5% and an additional 7% in the wrong direction. So it's such a different world that we're living in because the bid exists, right? The bid exists because the likes of not only BlackRock, but Bitwise is out there pounding the pavement every single day and onboarding new organizations, family offices, hedge funds, yada, yada, yada. So, we're on a podcast the other day with Jeff Park, and he's talking about a big hedge fund, and he was having lunch with the TMT hedge fund, and they've added exposure to Bitcoin. and they've added exposure through the Bitcoin ETFs. And so there's your bid, right? If that one podcast in New York City, one hedge fund in New York City is adding exposure, don't you think a bunch of the other ones that they compete with are adding exposure? Of course they are. And the reason why they can't ignore it anymore and have to add exposure is just pure, unadulterated, you got to keep up, right? So if you look at the numbers from last year, and Bitcoin is this incredible growing asset while at the same time having a huge production year in terms of overall performance, you can't ignore it anymore. Oh, by the way, at places like hedge funds, these aren't just monolithic entities that only do what they want to do. They have clients. There are clients that make up the capital that exists in the hedge fund. So they're asking questions like, why don't we have access to this? Why isn't the fund invested in or have some exposure to Bitcoin in some way? It's gone nuts. And oh, by the way, every time I turn on the TV, the biggest guy in all of finance on the globe keeps talking about Bitcoin. So why don't we have exposure? So if that's happening at one hedge fund, it's happening at all of them. And that's just one pipeline associated with the bid underneath Bitcoin. That says nothing else of a dozen other pipelines associated with the underlying bid.
It's hard to make 10% return on your money when you're playing with big money, big money. This is a opportunity for them to make 7x, 700% on their money if they believe what Larry Fink said. So I'm with you. I think it's a herd mentality. I think human nature, if you look at it at every level, we love to give people more credit than they really deserve on the leadership front. There's a few lead buffalo that are running the herd at the very front of the pack, and everybody else is just going, yep, I'm in the herd. How do I rank? Where am I in the herd? Oh, I'm in the front quarter. Okay, good. I think the cat's out of the bag. I think now it's just how slow you are to adopt, and essentially how forward thinking your firm it has to be or is by nature, right? It's not you're not always forced to be very forward thinking. Elon Musk is a good example of that. He doesn't have to do anything fast, but he does everything fast. And so I think people are going to get Bitcoin at the price they deserve, like the old adage. And I think that you're just seeing the beginning. If somebody says, well, I'm still feeling risky about, 7x doesn't mean much to them. They're not chasing the 7x. They may go in it when Bitcoin's at 450,000 and say, you know what, I'm happy with the 2x or a 75% return. Every single entity, including individuals, have cash needs that are eating away at their capital every day. And the pace at which it eats away, it leads you to the decision that you typically make. And so everybody is in this innovation race, and they're going, okay, how can I be exposed to the things that give me the most bang for my buck? And Bitcoin is now 100% in that conversation globally. And so, how do you put that cat back in the bag? I don't think you can. I think it's over. I just don't think anyone wants to talk about it publicly because they don't have the position they want to have. The people who are talking about it vocally have bags, man, bags and bags and bags. They're not.
Right?
Yeah, talk your book, exactly. The guys who are waiting to buy because they have to DCA in X number of dollars of capital and they can't lump sum it because it's too big of a number. They're not. They're downplaying it still, going, yeah, we don't know about this Bitcoin stuff. It doesn't, that's just human nature. You can't get around that.
Well, speaking of herding, and by the way, guys, listen, if you're listening in, do us a favor, share the link wherever you're listening in on, guys, whether it's Twitch or YouTube or X or Instagram or Facebook or wherever. Help us get the word out, man. Let people know what we're talking about here. We'd love to have more input and more questions and all that kind of stuff. But speaking of herd mentality here, Andrew posted just let me see here. I guess it was today, right? You have the expected additional Bitcoin ETF approvals at multiple wealth management firms by the end of Q1. Names of note that will broaden availability. You got Wells Fargo, you got Raymond James, you got UBS.
Mm-hmm.
Yeah, so I mean, this is not small. This is good. Now, I jokingly said win Edward Jones because Edward Jones has been very, very anti. We don't want Bitcoin to be offered. But
if Edward Jones had their way as an organization, they'd simply sell muni bonds to 100% of their customers. Yeah. That's the ethos of Edward Jones. That's what they want their advisors to do. Literally.
You don't like muni bonds, Andrew?
Yeah. So it's that organization is interesting to say the least. But I will say that the intel there is that this is simply a broadening of the offering of Bitcoin ETFs on two fronts. One, for example, Morgan Stanley, they broadened so that everybody that's at Morgan Stanley can buy Bitcoin ETFs unsolicited and add them to their portfolio. But they only added 2 Bitcoin ETFs. They added BlackRock's ETF and Fidelity's ETF. They didn't add others. So this is a broadening associated with Bitcoin ETFs being offered to more of those platforms. They're currently available at the highest levels of private wealth management. So you got to have 25 million or 15 million or whatever the cutoff happens to be at an organization to be at the highest level of ultra high net worth wealth management. But at the same time, it's offering the full swath of Bitcoin ETFs as they exist now, as opposed to just 2 or 3 or 4. So it's a twofold broadening that will happen across wealth management by the end of this quarter.
Yeah, and so Matt Hogan over there at Bitwise, it was remind me of this post I just saw from him recently here. He says, "I'm on the road talking crypto again. My big takeaway so far is that the iceberg is breaking up at national and regional advisory platforms. They're not quite there yet, but they're starting to move." And he says, bullish. And I mean, obviously, right? Here we come in. So if that's a correct understanding of what's going on there, and if we're seeing these potential Q1 opening up, as you were talking about there, Andrew, it's hard not to be really bullish through the end of the year because, if we're doing that right here in this first quarter, maybe second quarter area, I think that unleashes a whole lot coming up toward the end of the year. And as we were talking about here, we had such a great, amazing first year for the Bitcoin ETFs. But yet we were talking about this idea that we're going to likely see a lot more this second year. So I think it all just kind of comes in here and continues playing to what we've been talking about, which is just this expansion, this don't be silly and be bearish right now. It doesn't make sense to be bearish on Bitcoin at this point.
Right.
Have you ever gone into across state lines? I just got back from a trip from Las Vegas, and right when you cross into Nevada, you can stop at a gas station and you can walk in, and there's like 3 or 4 of the crummiest slot machines that you've ever played in your life in that gas station. That's where Bitcoin is right now. It's 3 crummy slot machines in the corner of the gas station right across the border of Nevada. Yes, the expansion opportunities that we have, the ETFs are 1 slot machine. That's like going to the first casino and it just be, all one type of slot machine and going, this is it. We've arrived. No, it's amazing. We've arrived in the fact that we've got an operating casino but the Las Vegas, the city hadn't been built yet. We're about to see Bitcoin, the city, be built within the financial system. And that's not even, we can't price that in because we're going to be dead before we realize it. But we're headed there. And I think that's the thing that is so incredible about Bitcoin. It doesn't take anyone being the central party. It doesn't take a foundation pumping it. It doesn't take negotiations with companies where, you're flying your executive team into the boardroom and going, you need to do this. It doesn't work like that. Has a life of its own, a mind of its own. And what's bringing people in, like Larry Fink, is Bitcoin by itself.
Yeah.
Doing what it does best, which is execute on the beautiful code that we all have grown to love. And that's really what's going to keep happening. It doesn't, all this is great news, but even if none of it existed, it still would be in the future at a future date, because that's where this thing's headed. And if you believe in math and you believe in power laws, you can run so many different power laws against Bitcoin. But the one that really hits me hard is the one that's closest to the actual curve over 16 years. If you measure the number of wallets that hold $1,000 in Bitcoin against that curve, it's got the smallest standard deviation you could possibly imagine over a huge swath of time. So the question should, in my mind, is always goes back to that simple notion of, how many more people out there can buy $1,000 worth of Bitcoin? Do I think that number's close to being exhausted, or do I think we're at the very beginning of that number? I'll let you determine for yourself, but I personally think we haven't even scratched the surface of that number. We're not even, if you extrapolate the future price according to how many people use it today versus how many people could use it, I think that number is even bigger than the number we're estimating because of Wall Street using it. I think, you have, if all 7 billion people on the earth own a little bit of Bitcoin, we can't fathom what the price would be. It would be a true, realization of what Satoshi's vision was. I don't think we're going to have that. I think it's going to be used and productized, and everybody's going to own some piece of Bitcoin in the way they want to interact with it. But still holds the potential regardless. It will do one or the other by itself,
Yeah, and I think it's a great point. I think you said it well there. They're going to own it in whatever way that they want to own it, right? It's easy for us, having been in this space for a long time, and I see Fibo's in the audience there, and we know what a staunch Bitcoin, hold your own keys kind of person he is. It's easy for us to get caught up in thinking that everybody should think the way we think, and is going to think the way we personally think about it. But as we often talk about on here, the reality is that when people are coming in, they're not going to hold those same values. They're going to be more interested in, well, if I have some Bitcoin and I let the bank hold it, then I can now get these other products I'm more interested in, these mortgage products or these loan products or these whatever it happens to be, because most people at the end of the day think, they think in terms of fiat, because that's what we live on, right? That's our form of trade. That's the end all be all at the moment. And so they're going to think in terms of that. They're not necessarily going to think in that. And if you haven't been in Bitcoin since prior to this year, where, as your great analogy, coming breaking out of the ground, we were all underground prior. It's hard for the average person. It's going to be hard for them to get to that point of what does Bitcoin actually mean versus what can it do for me today in terms of my lifestyle and, me being able to keep up with the Joneses.
Well, I have a principle that I live by in the crypto space, because there's so much hate against each other and, nativism on coins. The truth of the matter is, if you're honest with yourself, your bias is towards which coin made you the most money. That's just the bottom line, right? And if you made more money in one coin than the next, you're really thinking that coin's the greatest. And that's how 99% of the people think in the crypto community. So why not extrapolate that wisdom into the political sphere and say, what is the loyalty of politicians and the rest of America? What's made them rich? The US dollar. And that's what they're going to continue to have the loyalty to. And that's what they're going to always have the loyalty to, because they made their money there. Until you see wealth in Congress and the House and all of our politicians originating from them owning Bitcoin, that's always going to be priority number one, just like it is in our space. And so, I think fiat is always going to be the best layer 2 that exists.
I heard it.
Right?
I heard you say it the second. I heard you.
The best layer 2 that exists. It's what we're always going to price everything into, because the government can make an infinite supply of that and make a lot of people rich with it. And that's the whole point of the system, right? We want to all be rich. Well, if we're all rich because the government prints a lot of money, we should all be kind of loyal to that system as well. So it has to fit within the global. I know if you were in Bitcoin in 2013 and you hold an extraordinary bag, you want it to replace every fiat currency. You want it to be hailed as the greatest asset that's ever been held, and that every country is begging to own it because every other currency's gone to zero. I think there's little confirmation bias in that argument. Fiat has a lot of people that have made a lot of money on fiat, and it will always be that way, and government's always going to make it that way. The question is how do they incorporate that fiat inflationary system into the assets that we're all buying? And guess what? Driving the price up of Bitcoin and selling a lot of paper around it is an awesome way to inflate your currency. It's a great spigot that will put a lot of water of liquidity out into the marketplace.
Yeah. And, when we're looking at that, and it's not even dollars for dollars sake. It's not even fiat for fiat's sake, right? It's always, I think people get confused on this, especially when we talk about trading, right? And we talk about making money as traders, and people get hung up on the idea that it's about the money, but it's not about the money for the money's sake. It's what can that money do for you, right? So in terms of fiat, in terms of Bitcoin, even Bitcoin, what can that do for you in terms of fiat? For what can fiat do for you, right? Because it's not just having the dollars that matter. Obviously, if you've been alive since 1915 and you had $1 since then, or you've had money since then, your purchasing power has dropped almost, 95, 98%, whatever it's been. So holding money, just to hold fiat isn't what it is, right? It's what can it do for you? And so it's what do you do with that? I think that becomes really the most important thing. So if you're coming in, especially just now into Bitcoin, if you're not one of us that's been around for years and kind of been into it, if you're just coming in now, it really becomes, okay, well, what can this Bitcoin do for me in terms of creating fiat that I can then use to do the things I want to do, right?
Well, and to achieve diversification. That's, I think, the only reason why you ever put all your eggs in one basket is because you feel like that's the only way you can get your bang for your buck. But diversification is the way to achieve it, right? And so if you're trying to hedge your bet, putting all your eggs in the dollars basket is not good. Putting all your eggs in the real estate basket. Is Bitcoin do you want to hold Bitcoin as your emergency fund in your life? I don't. Why? Because when an emergency happens, I don't want to go, oh crap, we're in a bear market and I don't want to sell it at this price. That's what an emergency fund is for. It's so that you can focus on the emergency at hand without having to sell your house or disruptive things to you and your family, right? And so Bitcoin holds a special place that nothing else can replicate inside of a strategy that's comprehensive, right?
Yeah. I just want to bring this up here because we were talking about, all the infighting with the people, Bitcoin and XRP, and Andrew posted this.
We're now getting to the ethos of crypto Twitter for the last 2 weeks, right? We've got Bitcoin on one side, who's thoughtful and interesting and wanting to make, responsible decisions. And then we've got XRP on the end, who won't stop screaming at everybody. It's an appropriate meme. I don't know if either of you saw Elizabeth Warren lose her mind with RFK Jr. today in the hearing, but basically he's like, you want me to tell you that I'm not going to sue pharmaceutical companies? She's like, no, that's not what I'm saying, and she's freaking out. And so Yeah, it's a good representation. It's been nuts with the XRP folks over the past couple of weeks, and their thoughts on, XRP is going to replace Bitcoin, and Bitcoin sucks, and XRP is awesome, and what do you even say to that stuff? It's so it's the equivalent of somebody's just super committed to a particular stock and thinks another stock is dumb or doesn't make any sense. However you want to make your money, make your money. I mean, it's really, it's weird.
It's akin to a disease like alcoholism, because it's like you're saying, hey, don't you see the evidence of this in your life? And it's no, I've got to answer for this. I mean, listen, XRP, the technology itself is fantastic. Like when you use it, and then you use Bitcoin, and then you say, is this solve different problems than this? And are these problems valuable? The answer is yes. Those are, and so everyone that loves Bitcoin or XRP focuses on all of that. They just don't. They tend to ignore the huge white elephant in the room, which is literally a white elephant named Ripple, which own half the supply and have, in my opinion, not been good to retail in their dealings with wholesale selling of XRP that remain in their coffers.
It's like the XRP community, the idea that their token has this remarkable level of utility. If that was true over the past 10 years, then somewhere would be using it in a meaningful way. There are no banks that use it. They talk about, well, Bank of America is internally using it for all their systems. No, they're not. They're not doing that, right? So there's no meaningful difference. And again, this doesn't matter when it comes to making money, right? Doge doesn't do anything meaningful. It just exists and moves in price, and people have made a lot of money holding Doge and owning Doge. Same thing with XRP. XRP doesn't do anything meaningful, but people have made a lot of money off of it.
Well, and technical, if you're a fundamentalist, you're looking at all that stuff. If you're a technical trader, you don't care what they do. You're just looking at the charts and going, hey, arrows go up, So yeah, it's an interesting thing. I don't like to see all the fighting because it takes away from the true motive of the whole community, which is like, at least we're getting clear skies as it relates to like innovation. Let every crypto stand on its own merits. It doesn't need us as defenders. If it does, it stinks as a coin, in my opinion. If I'm serious, like if I have to get on a show and be like, no, you're wrong, Bitcoin's so good, then is it that good? Well, I don't need to tell you how good it is. Go look at the last 16 years and go look at the people who are adding it to their balance sheet, and let the body of work speak for itself, type of a thing. You can try to say that Ethereum has done the same thing, and I think Ethereum is, quite frankly, is probably poised for some of the biggest upside that exists in the market right now. Yep. The question is when does the sentiment change and everybody get that greedy glint in their eye and start chasing the next rocket ship? That's literally, if you could just track that glint and you could get ahead of it, you could make billions in this industry, because that's what everyone buys and sells on these days. It's nothing's on utility. Chris, you posted something about XCN a long time ago, and I've been watching it. And I don't know what they do, but boy, did I wish I had some of it.
It was a crazy pump there, and then it pumped again, and now it looks like it's getting ready to maybe push again here, And like you said, I post these. I'll tell you what, there are people out here that know so much more about what these particular companies purport to do, with their cryptos and whatnot, and yet I have no clue. I'll pull up a chart. I'll say, hey, here's a chart. It looks good. I don't know what the hell it does. Most likely it doesn't really do what it does. Or if it does, it's not really as groundbreaking as it says it is, but the chart looks good and I'll trade the chart. You know, you don't have to, you know, a lot of people believe that you have to understand, you know, the fundamentals and what does the company do and all that. And some people make some money on that. Some people do. But for most people coming in, technical analysis is a lot easier to grasp. Now, the problem is there's a lot of really bad technical analysis out there. And technical analysis, you know, it covers such a large ground, everything from, you know, Elliott wave to Wyckoff to price action to all these other systems to moving averages, you know. So when somebody says, you know, technical analysis doesn't work, my first thought is always, well, what specific technical analysis are you talking about? And did the person using it really use it properly? And most of the time, you know, they don't even know what technical analysis they're talking about. And the person didn't use it properly, right? But it's easier to grasp. And once, like any other skill set, once you practice it correctly, you know, if you practice wrong, it's like anything else. If you practice it wrong, you're going to learn to do it wrong. But
Listen,
if you practice it correctly,
a winning trade, you could have a winning strategy that me and you are trading at the exact same time. And we could be executing the exact same indicator. And because I have a bad setup and I'm manually entering the digits in some, you know, window that takes me away from the screen, just a little inefficiency in the way I enter the data could be the difference between the strategy working for you and it being a losing strategy for me. Like it's not as simple as just like, do I have a winning strategy? Anybody can play, you know, some really well-known indicators like RSI and MACD and, you know, those things. And can you make money with those? Yeah. But because they're so common, execution is paramount. Like you have to know exactly what you're doing because everybody else is playing those too. It's a very common. So you know, finding a niche, it's like playing cards at a poker table. There's a certain way in the quote book that you play pocket aces. But when you're playing the best people for the biggest dollars, you're not playing according to the book. And if you are, you're losing. And so trading is like that too, is like you kind of have to find your rhythm at the table and find out how you play. And that takes practice and time and quite frankly, losing money. Just like you do in poker, you kind of have to have a budget for the education.
So you brought up Las Vegas, a recent trip to Las Vegas. You're bringing up poker analogies. Are we to understand that you were having a good time in Vegas, playing at the casinos?
I was not having a good time in Vegas playing at the casinos. I was there doing a little work and a little dad stuff for hockey with my kids. But I will tell you this. Vegas intrigues me at a level that causes my brain to really go into hyperdrive. Because the odds, they've convinced trillions of dollars to come to them full well in transparency that it's a losing proposition. And that is it's a very interesting dynamic psychologically to get around. So I do enjoy sitting at the blackjack table and talking to people. I do enjoy watching it and you know, kind of using it as a brain drain or an exercise and understanding markets because you know, you can find two tables sitting next to each other. One's a blackjack 3-2, one's a blackjack 6-5, and people sit at the 6-5 with the same minimum bet, not understanding what they're giving up. And that's unbelievable to me, like to play a game and not understand the rules. And so, you know, I think that there's a lot that can be pulled from that in the markets. Markets are the same way. It's a risk reward dynamic, and it's all about the numbers, and it's all about trying to find out, you know, whether you're the sucker at the table or whether it's somebody else.
I like that people get a little bit of a, you know, the curtain gets peeled back on who Tillman Holloway really is here. He's talking about Vegas. Most people talk about what happens in Vegas stays in Vegas and the fun, and he's talking about math and rules in terms of Vegas. This is what I deal with on a daily basis, okay? This is what I have to deal with.
Listen, I'm intrigued by things I don't understand. And there's people out there that win consistently in Vegas, and they get banned from casinos. No, Dana White's one of those guys. Like, he's blacklisted from 80% of the casinos in Vegas. Why? That's a how did he do it? That's not something, he can't just be lucky. That you can only be lucky for so long.
Yeah.
And there's something behind, I think, open markets. There's nothing more open than sitting up at the table and putting a cold hard cash on the table. Someone handed you clay chips and you betting. That's the essence of a market. Willing buyer, willing seller.
Yeah, and I think that's the thing there, right? If traders come in and they hear the old adage that most retail traders lose all their money in the markets. Very few actually make a career out of trading, which is true. But all we have to do is look at here, especially here in America. Look at how popular casinos, and gambling is. Look at how popular scratch-off tickets are. And when you look at that, and then you look at the average person coming into the markets, especially crypto, really, is it a surprise that most of them are losing all their money and they're out?
Well, look at how popular meme coins are. I mean, that's been, what's been top of mind for crypto for the last 18 months.
Yeah.
You've got, all of the largest financial institutions on the planet being involved with, on some level, the Bitcoin ETFs. But retail doesn't give a rip about that. They give a rip about, can I make 2 to 5x on Trump coin? Can I make 7x on Melania coin? Can I make, whatever X on Pepe or Bonk or whatever, Mudang coin, what is some small hippopotamus that bites people? I mean, seriously. So, gambling culture is a real thing in American culture today. You see it with the fact that sports betting sites are everywhere, and they absolutely dominate advertising. You can make the case that 2 years from now, pharmaceutical commercials and marketing will be significantly reduced based on the current regulatory environment or the adjustment in the regulatory environment that'll happen. But gambling sites and organizations will soak all of that up very, very quickly.
Well, even manufacturing of toys have been doing this for a long time. Look at the videos that came out a couple months ago of the Costco. Costco launched some toy, and you could only buy a limited 13 of them per person. And there were riots in Costco's, people ripping them off the shelves, trying to get their 13 because they were all going to go and resell it on eBay. Like a hustle culture in America, especially, it's going to get worse because our standard of living has never been higher, but it's come with extraordinary debt accumulation. And so, we want to keep that standard. And how do you do that? You got to grow your top line. And that's what that's about. I think everybody's out there looking for the next score. And there's limited ways to do that outside of ecosystems that provide you the scarcity and the demand that some of these that we're talking about provide you,
Yeah. So listen up, guys. If you're listening in here and maybe you feel a little shook, maybe you feel like you're being targeted by what we were just saying there, good. We're not saying it. Listen, we're not saying it to make you feel bad. We're not saying it to laugh at you. We're saying it because if you're listening and all of a sudden, us saying it evokes some kind of negative reaction out of you, then you're probably that person. And if you're in the markets and you're that type of person, the odds are you're going to lose all your money in the market. We're not telling you to get out. We're saying recognize how you're approaching the market and then change it to something that's more conducive to creating you wealth and even.
Well, I mean, we speak from experience. We've spent plenty of time chasing something and getting our teeth kicked in.
Yep.
I've lost plenty of 5-figure moments in crypto where you go to sleep feeling good and you wake up and you're, what happened? Where'd the money go? What happened? Right? So nobody's immune to that.
Chris says something at the end of every show is like, you're the only one that can decide how much you are going to lose. I don't know if I got that right, Chris, but I know that's the gist.
The only thing you control is how much you lose.
Yeah, the only thing you control is how much you lose, which is very wise, because if capital is precious to you and you don't have the mindset that you're sending soldiers into battle and there's going to be casualties, then that's a safe way to enter the markets. But there's the other side of that knife, which is you're the only one that controls how much you make too. And that's equally as tough of a decision. So just be prepared that it's not fun when you put all your eggs in one basket and it goes to the moon, because 9 out of 10 times you don't catch the high and you sell your stack as it's falling back down, and you are kicking yourself for the money that you could have made in a way that almost taints the win. And so you're damned if you do and you're damned if you don't is the bottom line. You have to set realistic expectations. And if you have all your eggs in one basket, XRP, and you've seen a 7x gain and it's at all-time highs, I beg of you to DCA some out. Take some profits off, because there's very few times in nature that things go up 700% and don't have a violent pullback. And so if you're XRP rich and cash poor, or Bitcoin rich and cash poor, or real estate rich and cash poor, and the market dives, you're in a bad spot because you're cash poor and now asset poor. And you have to ride out long periods of your life going, oh God, if I had just sold at it's a miserable existence. And if I had only sold, or if I had only held, there's no right answer. So there just has to be a systematic approach of like, you know what, I'm not going to ever put more to work than I'm willing to lose. And when I'm up more than what nature tells me I'm allowed to be up,
take some sort of profit.
Listen to nature.
Take some sort of profit there, guys. Reward yourself a little bit. You don't have to take it all. I know that's a hard pill to swallow. But the one thing I teach my guys, my guys and gals that are in the trading academy is, listen, you can have your target, and sometimes, like the XCN, for instance, right? We did that in a Thursday Elliott Wave session, I believe is what it was. And right after that, it took off. And our target was 6R. We were going to make 6 times our risk. But sometimes it pops up like that. It continues up to 20 times your risk, right? And so in those situations, if you see it's popping up there and you're like, God, I want to get you, take some profit where you initially thought you were going to take profit, move your stop loss up to break even at that point. And that way, if it does come down against you, hey, at least you got some, because normally you wouldn't have gotten any at all, because you wouldn't have taken any profit thinking, oh my God, it's going to keep going up. And when it came back down and hit the stop loss, you're getting out around break even. You'll have some fees associated with the trade, but really you're coming out, without really losing anything. And that is, I think that's probably the safest way that you can approach, those kind of trades that really take off on you. Because if you're in the market enough, just focusing on your smaller trades, like that one, 5 or 6R there, you're going to come across these occasionally that take it off with it. So instead of always looking for the big explosive moves, look for good, as Tillman's saying here, look for good, consistent targets, right? Don't get crazy with it. And sometimes it'll get crazy and you can take advantage of it when it happens. But if you're doing that, I think you're going to end up a hell of a lot further ahead than if you're just trying to catch these big, huge moves in doing that. So,
and if you're risking a lot and you believe in one specific one and the eggs are all in one basket and you've made a good lick, de-risk your life is the point. Like, put some cash in your hand so that, you can start, what if it continues to dip? Then you've got cash to buy more, you never know, but flexibility is what you're after.
No risk it, no biscuit.
And with that, I think we're done for today. Be sure, guys, listen, be sure as always, hit the thumbs up, the like, leave a comment. Talk about Tillman's hat. Let us know if you guys like it. He came in strutting like a G today, guys. Not that he was really strutting, he was sitting in the chair, but nonetheless, if he were walking in, he would have been strutting like a G. So let him know what you think of his hat there and anything, or the bald head. and anything else that you might want to talk about on the show here. As always, guys, listen, we're always open to questions and whatnot. So if there's something you want us to talk about on the next show, again, leave a comment underneath. Let us know. We'd love to get back there on you.
Other thing that people need to know is Tillman often wears that hat with his Joseph and the Dream Color coat, and he has a cane that goes with it. So he's got Joseph and the Dream Color coat.
Does it have a diamond?
And the cane. Yeah. He's got a cane and the multicolored Joseph and the Dream Color coat that goes with that hat. He's a little too nervous to wear it on screen. So
listen, as my teammates all told me, haters are gonna hate. You know,
and ain'ters are gonna ain't, right? All right, as always, guys. Hey, listen, the three of us appreciate all of y'all out there coming in and checking us out every week. Our viewership continues to grow. We love it. A lot of that is due to y'all helping out. Again, hitting the likes, hitting the thumbs up, leaving comments, sharing the links. So we'd really appreciate if you could continue doing that. We'll continue to bring you guys a little comedy, a little good times, and hopefully some information that makes sense and helps you kind of make sense of what's going on in the Bitcoin and even TradFi related worlds, the big monetary system. Hopefully a lot more than a lot of the nonsense that's spoken about on social media. So that's it. Again, follow these guys on Twitter, on X there. You've got AP_abacus. Yeah, if you can figure out how to spell abacus, just Google it, guys. It'll correct it for you.
Chris, how are you going to leave the audience talking like that when the whole next show is us pitching Inks token and it's a little octopus and stuff? Like I already know that you're next on the meme coin list.
I have no clue what this guy is talking about, y'all. I don't even push me. I don't even.
Listen, if you see it, it's a money
get me in trouble here, man.
Away from
you. I have, just so it's clear, I have no intention of ever starting a Bitcoin. I guess I can't say that I never would, because we never know what we would do in times there, right? But I don't plan to ever. I see no reason to do it. I make good money trading. That's all I have to worry about. I don't need to launch a meme coin that rockets up and then dumps, and then everybody goes, "Oh, you took our money." I'd rather not be a part of that. But Tillman may be doing a UT61 OL type coin, maybe something like that.
No, if you haven't picked up on the hat, it's Tillman with hat. That's the next thing.
Tillman with hat. I love it. When Inks algo. There is one. It's the one they launched. They call it the Bitcoin algo. It's the Inks algo. It was launched on my birthday, November 18th of last year. So Jojo was asking about that. I just want to let you all know it is there. You can check them out there at where?
Archpublic.com.
Look at that, guys. Perfect. Right together with each other. Almost like they've been practicing all night before the show today.
We are synchronized swimmers in our pastime. That's why we dive together, and it's a sight. We're in sync.
I can't unsee what's in my head right now. Stop your nonsense. Okay. Listen, we're out of here. Thanks a lot, as always, guys, for joining me. We'll be looking forward to seeing y'all next week. Everyone, join in next Wednesday. We'll have more laughs, more info, more news, more thoughts, all that fun stuff, and hopefully you guys will have a good time for this hour on your Wednesdays. I'll be back on Friday. I think Fibo's going to join me this Friday, same 11 a.m. Central, 12 p.m. Eastern. So I'll let you guys know about that as well. Until then, take care, trade safe, and as we said earlier, the only thing you control is how much you lose, not just in the markets, but in life. There you go, right? All right, take care, everybody. Thank you guys so much. Peace out, all right? Peace out.
See you guys.